All right, welcome everybody. This is the second webinar in a series that we've called Small Business in the Time of COVID-19. And I'm Tony Gagnon with Popper, Gassman and Hoffman. I've got Dan Hoffman and Alan Heydrich with me. I want to take just a few minutes to point out a few housekeeping things. The webinar tools that we're using, over on the right, there's a section for questions. If you have any questions throughout the presentation, please enter them there in that section, and we will get to them at the end of the presentation. Also over on the right, I've uploaded a couple of handouts for you. These are the things that Dan's going to go through in the presentation today. So it'll let you have a copy that you can use after the webinar, and you can even download them now and have them to look at while Dan's going through his presentation. And that's all the housekeeping things. So I'll just let Dan take it from here.
Okay, thanks, Tim. Well, first of all, I just wanted to go over a few items that I think need some clarification. Some of the questions that have come to us regarding the PPP loan have gotten a little bit jumbled, so I'm just going to go over what we know at this point. So one of the questions has been compensation in excess of $100,000 for employees or owners. So what that really means is if you divide it by the 52 weeks, an owner and employee, if they get paid more than $15,385 during the 8-week period, it's not going, the amount over that is not going to qualify for loan forgiveness. However, that does not include the employees or the employer's contributions to retirement plans or to group health coverage. So those are in addition to the $15,385. That's only for the wages. And we've also gotten some kind of mixed messaging from some of the lenders saying that the payroll cost is the net amount after taxes and not the gross. And the SBA specifically says it's the gross payroll. So if anybody's getting any feedback on that, the measurement is gross payroll. Another thing that's been a little confusing, I know some lenders have sent out some emails that the 8-week period starts as soon as the loan was approved. Again, the SBA says it's when it was funded. So if you got the loan and you didn't get the funding for a week or 10 days later, it's the day that you actually received the distribution. Another thing has been, we've had a couple employers that have offered to rehire employees, but the employees have refused, and they're afraid that's going to count against them. And there's a specific section in there that says, if you want to rehire an employee and they decline, make sure that you offer the employee to be rehired in writing and that you document their rejection and the date that that happened. So just hang on to that for your documentation. Another thing that just recently came out was that if you didn't get the loan in good faith, and what they were talking about was that you had access to other loans, lines of credit, or capital, and you took this loan, that none of it would be forgiven. However, the SBA has clarified that and said that the good faith certification for the necessity of the loan, if it was less than $2 million, they give you a safe harbor and say that's deemed to have been made in good faith. So that's not anything that people need to worry about at this point. So those are just a few of the questions that we've had over the past few weeks, and I just wanted to kind of go through those and clarify them a little bit. So as far as the documentation goes for this loan forgiveness, I'm going to show you what we're using. Can you see that okay, Alan?
Yep, I can.
Okay. So this is just a spreadsheet that we're using where we're plugging in the loan amount, the number of full-time equivalents, the date of the loan, and then we're just keeping track of the gross wages by week, retirement, health, and other benefits paid out, unemployment payments, and then if there's any EIDL advance or wages, you're not supposed to reduce the employee's wages by less than 25%, so that would have to be factored in if that happened. Down here we've got rent, any mortgage interest, utilities. So this kind of keeps a running total for you of what can be forgiven over this 8-week period. Now I know some banks have sent out some things similar to this. We feel like this one's a pretty easy one to use. So if anybody needs this, this is what we're using for the clients that we're keeping track of it for, and it seems to work pretty well. It's pretty straightforward. So if anybody needs that, let us know, and we'll be happy to get you a copy of it. One of the other things, the AICPA has come out with documentation for loan forgiveness. So what we're doing is we're keeping all the payroll reports, group health benefits, so our Blue Cross Blue Shield or any other healthcare, the actual invoices that the employers are receiving, retirement plan funding, benefits. So mainly what we're trying to do is just keep the payroll journals, invoices, canceled checks, and we're also going to be including the bank statements and highlighting. So we're just going to build some kind of a workbook where we've got all this information, and it's just kind of goes in order. Here's the wages, here's our rent, here's our health insurance, and we just have different sections and have the documentation. So I think that's really the main thing, is just make sure you're keeping track of all that. Now, one thing, the lease payments, or if you're renting, you're going to probably need a copy of the lease agreement. And some questions have come up about, well, if I was behind on some rent or insurance, can I make that up during this 8-week period? And they specifically say that it's expenses incurred and paid during the 8-week period. So I wouldn't try and include any of those, because those might get rejected. The other thing, keeping track of the full-time equivalents. So what the AICPA is saying is that the CARES Act, since they don't define how to calculate it, you can use the Affordable Care Act of 30 hours per week. So that's been another question that we've been asked quite a bit, and it looks like 30 hours per week is what we can use for the full-time equivalent calculation. If hours are not available, employees would be deemed to be a full-time equivalent if the earnings are over $217.50 per week. So that's just calculating based on the federal minimum wage times the 30 hours. So there's going to be a couple options there to try and compute that. The other thing is using the average payroll per employee per week comparison. They suggest to use that because that's more in line with the CARES Act, and they feel that that is a much better approach to calculating the full-time equivalents. So this area gets a little bit complicated. So if people have questions on that, or if you're not able to hire everybody back, we might want to talk about that and see who you have, how you're calculating that, so we make sure that you don't get into a situation where you don't have the full-time equivalents and you end up paying some of that loan back that maybe you wouldn't have to. So there might be some ways to get by or get around that. Tony, what kind of questions do we got, if any?
Right now, we don't have any questions. If anybody out there has any questions they'd like to ask Dan or Alan, there's a questions panel there on the right. You can open that section and key them in, and we'll let them answer them for you.
Another thing that I didn't touch on yet that has come up, some of the people that are sole proprietors that have received this, or independent contractors, how are they going to verify what they pay themselves? And we've gotten some different feedback on that from the banks. However, my understanding is the SBA has basically said, if you take your 2019 Schedule C, that's what they're going to use, and they're just calling it replacement of income. So my understanding is you don't even have to write yourself a check for that amount. It's just going to be forgiven. However, if you're over the 100,000 and you don't have any rent or allowable expenses besides the payroll, there's a chance that some of that could have to be paid back. So again, if anybody has that, that might be something that we want to talk about before your 8-week period comes up. One other thing too that I thought was kind of interesting, if I can find it here. Yeah, so if the 8-week period begins when the loan is funded, but your business is not allowed to open, the AICPA is saying that the borrowers can use the 8-week period once they were allowed to reopen. So if anybody has that situation, we might want to make sure that that's being documented, and maybe talk to the lender too about that, make sure they're understanding what that's supposed to be. Alan, you got anything to add to any of that?
Well, one thing I might mention is I don't think it hurts to talk to your lender about what they're going to require to get this loan forgiven. That's what I've been telling a lot of people. And the other thing, tying into that PPP loan forgiveness calculator that Dan showed you, is we do have a full-time equivalent calculation worksheet that ties into that.
Another thing too is, from talking to some of the lenders, the SBA is going to be the one that actually forgives the loan, not the lenders. But each lender is saying, well, this is what we need, and a lot of them are saying different things. So talk to your lender about what, if they've got any special requirements that they think they're going to have to submit to the SBA. But I still believe if you've got the canceled checks, invoices, payroll journals, bank statements, copy of your lease, that's going to be sufficient, and get it in some kind of an organized manner so it's easy to follow, and how you came up with the amount that you believe should be forgiven. And then that submission, I think, would be adequate to get the SBA taken care of. Another thing that just a note was, when this came out, this loan was supposed to be non-taxable. So the IRS just recently said, well, it's non-taxable, but you can't use the expenses that you incur against that. So basically they made it taxable. However, the head of the House Ways and Means Committee says that that was never the intent of the CARES Act. And so they were planning on correcting that. And I think there's even been a bill that has been introduced or is being introduced in the Senate to make it a non-taxable loan forgiveness. So I think that's going to get lined out here fairly soon. But at this point, there's still lots of questions, and there's really no set of rules that you can just say, this is exactly what it's supposed to be. So things keep coming out on a daily and weekly basis. So we're just trying to stay on top of it. But I think we're getting to a point where we've got a pretty good idea on how to manage some of this stuff.
All right, I've got a couple of questions if you're ready.
Okay.
Okay, somebody's saying, can you mention how receiving the EIDL grant affects the payroll cost calculation for forgiveness of the PPP loan?
So if you notice on this one, there's a spot in here. If you receive the EIDL advance, that's supposed to be backed out of the payroll costs. So when you're looking at this and calculating that, you have to put in here how much you received on the EIDL advance. And that could be a reduction of the payroll expenses that are forgiven for the period. So that's something to kind of monitor, and hopefully your payroll costs with your retirement benefits and insurance are going to cover that. But if it doesn't, that's a potential payback.
Yeah, the initial rule was you can't use both for the same thing. Now you could potentially have the situation where your PPP loan wasn't as high as it could have been. So there might be a little room to work it out where both could be forgiven if they're used for two different things. We're not real clear on that yet.
And Dan, just so you can show them that, we're seeing the PDF file from the AICPA. You might show them back that spreadsheet and where that EIDL amount would go.
Okay, can you see that one?
Yes.
Okay, so right here, this section, we're putting in the gross wages, retirement, and other health benefits. And down here, there's a deduction for the EIDL advance up to $10,000. So that's where that would go.
All right. And the next question is, can we use our quarterly bonuses toward the loan?
Yes. The answer to that is yes. The indication was that you can't reduce the wages by more than 25%, but there's no rule against paying any bonuses. The only thing to keep in mind is if an employee or an owner goes over that $15,385 for the 8-week period, the amount in excess of that is not going to count.
Okay, that's all the questions we have so far. So I don't know if you guys have anything to add before we wrap things up.
I really don't. I wanted to kind of get this out there because there's been some questions on this and it's still confusing, but we're getting to a point where we have a little better idea of exactly how to handle some of this stuff. So I would just tell people, if you need this spreadsheet, let us know. We'll be happy to send it to you. If you need any help filling it out, we can certainly do that. And if you got specific questions, just give us a call, and we may not have all the answers to this, but we can certainly try and find out. And as things continue to come out, we'll try and get that out there for everybody. So do you have anything else to add, Alan?
I don't think I do.
Okay. All right. I appreciate everybody's time.
All right. Thanks, everybody.
Thanks.